Good morning and happy Tuesday. Welcome to the Rick Helps Real Estate Show, where we discuss real estate trends and numbers so that you can be well versed on what's going on and you can be a hit at all the cocktail parties. So at this channel, what we do is we just try to look at the numbers and see if we can spot any trends. I get asked all the time, when is this inventory shortage going to get to normal? I have no idea. Will I ever be able to afford a house? Sure. When? I don't know. So how many people have left this show already? But what we do know is we're starting to spot trends, you and I together. And we're looking at the numbers and they're making sense. And if something turns, we're gonna know about it. Now, they don't teach you anything in real estate school when it comes to forecasting. Real estate school is all about learning how to pass the test. And the test is mostly numbers that you probably never use in your lifetime, and how to keep from getting sued. So that's what goes on in real estate school. Now, when we look at all these numbers and we look at this data and we try to make sense of it, there's always outside influences that I call that we just can't see coming and we don't know. And I kind of put them together a little bit here, and just, there's rates, there's financing, and there's war, and there's markets. So, there are things that can happen that we just don't, we can't see it ahead of time. So as much as we drill in on real estate numbers, there's things that continue to happen. Now, I did find in the National Association of Real Estate's website yesterday, their formula for calculating inventory and shortages, and it's right here. You can take a screenshot of that, see if that helps you. I have no idea what that means. And then as we're looking for trying to make sense in this crazy market, and I've got some numbers to go over here again. Take a look at this. I did not know that this was happening. There is a ketchup shortage. The new shortage, ketchup can't catch up. How clever. The pandemic turned restaurants into takeout specialists, boosting demand for the condiment. Everyone out there is grabbing for ketchup. I thought it was salsa. I was always told that salsa was overtaking ketchup, but see, you learn something new every day. Now, as we look today, we have 4,319 homes on the market. Once again, a record low, broken record. Everything's kind of staying the same. We go over and look at the Cromford report, look at one of their new charts today. This green one is showing the under contract list price. So you can see that it's just down slightly. That doesn't mean a trend, because you can look here and you can say, see, they kind of went down there, but then they went up, kind of went down here. So prices are continuing to go up. The big change that we're seeing, which is no surprise to anybody, is the red line is actual sales price per square foot. And the brown line is the listing price. Look at the gap. It's getting ever so slightly larger. There is nothing selling for list price right now, folks, nothing. And also keep in mind, when you get into the inspection period, you're not going to find sellers willing to fix anything. I mean, those little things that are broken, you're going to have to take that on. They just don't have to do it. Sellers can be a little stingy right now. It's brutal out there. I have never written so many offers in my lifetime without getting a contract. It's been rough. What they say here is the under contract line has been rising at a strong pace. And if sales prices were going to enter a declining trend, this green line would have to show a significant falling trend first. This one up here. We can also see that the average closed sales price is now higher than the average list price for the same listings, and the gap is increasing. This did not occur in 2005. We've never seen this phenomenon before, where the average house price is selling above the list price. We keep going back and comparing to 2005 because the crash was shortly after that. So we're really looking at the numbers to see if there are any similarities. Everybody's going, well, house price is going up like crazy. We're going to have a crash. At the peak of the bubble, the CMI hit 313. Crawford Market Index, 100 is normal. Peak hit 313, which is advantage for sellers. and far below the currently measured 499. So until the CMI drops below 313, this 2021 housing boom remains stronger than the peak of the 2004-2005 boom. Pricing, of course, is a trailing indicator, especially closed sale prices. And here's the chart. So when you look at a number that says that we have a Cromford index of 500, that is a predictor of where prices are going to go. So prices are going to go, I can safely say, for the next 9 months, prices are going up. Now, here's some interesting news. Migration. This is from Redfin. Redfin gathers all their data from, people going to their website and stuff. A record 31% of Redfin.com users look to relocate as home buyers' interest in affordable areas intensify. Phoenix is the most popular destination for Redfin.com users looking to move away from expensive coastal cities. Some out-of-town buyers are shifting their search from Texas to Arizona after recent winter storms. So people thought they wanted to go to Texas, and then they saw what happened. I didn't think people realized, wow, Texas gets cold? Texas weather's rough. Ice storms, humidity, it's just rough. So they're shifting away. They're online. They're looking at Texas. And then all of a sudden they go, no, we're not going to do that. Remote tech workers moving from San Francisco to Las Vegas would have $40,000 more of disposable income in their new hometown. Well, yeah, it's pretty expensive over there, but you used to not be able to move and take your money with you. So here's where we are with interest rates. And this is a chart that shows the 10-year Treasury yield, and mortgage rates follow closely to the Treasury yield. So if Treasury yields are going up, mortgage rates will continue to go up. So they're saying here the risk is, they're going to continue to go up. The hope is that they will go down. So there are bond market traders that are watching these numbers and giving their opinion every day. And, that's just something you have to follow. We don't know. It said, is it realistic that the red line to be all the way up around 2.4? History suggests it's very much in the playbook. Each overlay is exactly the same size and cover is exactly 1.9%. In other words, we're trending about 1.74 on the treasuries right now. So they're saying, wow, they could go up to 2.4. What does that mean? That means a 4% mortgage rate. Where would mortgage rates be if the 10-year yield rose to 2.4? A safe bet would assume, there I said, 4%. So we don't know. We're watching. Here's the 30-year fixed mortgage rate versus the 10-year treasury. So, you can chart yourself to death in this market. There's a lot of numbers to look at, and we will continue to do that. There's a new listing that came up. I kind of like it. It's in the historic district, and it's $399. And I had to giggle. I'm going to show you a couple photos here, but down in our MLS, down in this section right here, it shows you the updates. And like the floor was updated in 2015. Partial heating and cooling updated in 2017. Partial baths updated in the year 1415. Oh, it's a typo. I've done that. But take a look at this. This is down in the historic district by close to downtown. I just think it's kind of cool. It was built in 1952, and it's 1,200 square feet. But they did a really nice job with this one. I like this layout. Beautiful floors. I just thought I'd share it with you. Some of the homes in the historic district have got some really neat, quaint little backyards. Some of them are a blank slate where you can go back and do whatever you want. But I kind of enjoy that. That's a market that again is tough. There's not a lot of inventory there in the neighborhood that I follow as kind of a barometer, just because I know it so well. You guys have heard the name before, and it's called Ocotillo. Normally about 85 homes for sale down there. Let's take a look at today. It's shocking. There's 4. Last night there were only 3. New listing came up. This one's $479.9. It's 1,900 square feet, 3 bedrooms, 2 bath. And then the only other choices you got is one for $550, one for $665, and one for $2.5 million. Slightly bigger than the first one at 5,551 square feet. Hey, when's inventory going to start showing up? I don't know. I don't know. I watched Jeb Smith's video this morning in Southern California on, should you buy now, should you not? And it really boils down to your personal situation. Don't buy if you've got FOMO, fear of missing out. Buy if that is your situation and you're moving and you want to get a house. Because if the pandemic did anything, it made us want to go out and get our own backyard. It made us want to have a place where our dog could play and room for the kids to play. And so everybody collectively said, all right, I'm not doing this apartment living or renting anymore. Let's get out there and see what we can find because rates are good, and everybody did it in mass. There is not a city out there, with the exception of San Francisco and New York City, that isn't feeling what we're feeling here in Phoenix. It's just, it's tough everywhere. And the small towns are actually getting a bigger pinch because people are leaving the big cities and going to the small towns. So there doesn't seem to be any relief in sight. And it's not doom and gloom. I really think that things will go back to normal one of these days. It may take a year and a half for it to shake out. I don't know what normal is going to look like. There's a lot of stuff that could hit us that could change all of this math. So we look at the trends, and I think the Cromford report probably lays it out the best for us because it's local data, and it shows you specifically what's going on now to help us a few months out. And some of these numbers can change kind of quickly as far as the trend goes. And I'm going to pull up their Cromford index again. I know we've seen it before. And so buyer traffic is actually almost normal. If that moves either way, I suspect it's going to come down in the red as people get priced out and just get worn out. And the market index, which means green, means that there's just very little inventory out there. That's here on the supply index. So it's saying when it gets to 100, then it's normal, it's balanced. So these are the numbers that need to trend. And you can see the market index here is coming down, but going from 514 down to 499 is not a game changer. Remember, 300 is still an intense seller's market. So we have a long way to go, and it's only shifted from here, 514 down to 499 from May, or not May, what is this? That's March, from the first part of March to now. So by percentage, it looks like it's heading the right way, but it has to triple. Our inventory has to triple before these people over here start to see any relief. So we'll keep watching the numbers. So shoot me any questions that you have. I do have a Zoom call with some buyers from out of state today. We're just going to kind of take a little drive around the neighborhood and show you what's available. If that's something you want to do, let me know. I'm more than happy to set that up. If you're coming to town and you want to learn some of the neighborhoods, I know every square inch of this valley. I'd love to take you around and show you, talk to you about the neighborhoods, good places to eat, terrible places to eat. There's many of them. So I will be back tomorrow, I hope. And until then, everybody have a fabulous Tuesday.